and gold as well. So Bertha took us through U.S. equities. To talk a little bit about what's going on with commodities, we're now joined by Bill O'Neill. He's a founder of Logic Advisors. He was also the former director of commodities at Merrill Lynch, an influential voice in commodities. Bill, thank you very much for your time and thank you for joining us on CNBC TV 18. What do you make of the substantial crash that we saw in prices yesterday and this slight recovery that we're seeing today?
Well, as far as the slight recovery is concerned in silver, I think that's just a little bit of a bounce. What happened was this market became so over-speculated, as did a number of other markets, including crude oil, that it was inevitable we were going to have this huge correction. The ETF in silver had grown so much that it was at the point where even the slightest bit of a turn in sentiment could really send it down sharply, and that's exactly what we saw. It's a money flow factor. Now also, in my view, the rally in silver was based on gold. Even though silver clearly outperformed gold, the reality is that the genesis of the rally came from gold. The reasons the market was rallying were based on gold, and mainly gold's role as the alternative currency of choice, or the ultimate currency, as I like to call it. And I think that that pattern is going to continue to play out.
Oh, where do you see the dollar play into this, Bill? Because I know that to some degree people were talking about yesterday's crash in the context of the strength that we saw in the dollar yesterday vis-a-vis the euro. Of course, there was also not very encouraging economic data that came in yesterday that helped commodities sell off, and then of course you had inventory data that helped crude sell off. But how big a role is the dollar going to play, and what's your forecast on where the dollar is headed?
Well, should the dollar have a what you might call a super rally, and we see it go significantly higher, obviously that would take some of the underpinning away from commodities, particularly things in the agricultural sector, things like copper, any dollar-denominated commodity. However, in the case of gold, I think it's a different story, because, I mean, let's face it, who really wants to own dollars? Who really wants to own euros? Who really wants to own yen? Who really wants to own sterling? Now, we even see the central banks getting out of these currencies and taking on other assets, gold being among them. So I think that the gold market can continue to go up even if the dollar extends this rally. Now, as I say, if we have some sort of a super dollar rally, it might change things, but I'm not anticipating that. I think what you'll see, and of course this event in Greece, which happened just a little while ago, throws something new into it, which I think is bullish for gold, by the way. But I think the dollar will have a rally to some degree, but not a great rally, and then you'll start to see things kind of go back and forth, and currencies moving more in a trading range pattern rather than a strong trend in either direction.
I want to come to crude in just a bit, but first let me finish getting your views on both gold and silver. Even though gold's seeing a bit of a recovery today, it's still way off the 1570 mark that we've seen, the highs that we've seen it reach in the last few weeks. Silver, of course, at one point was trending towards 50. It's currently at 35. Do you see both these commodities reclaiming those highs in any fashion over the course of the next 6-8 months, or do you believe that that was over speculation and that's off the table now?
Well, as I say, I think the fundamentals in gold justify higher prices. And you can throw in not only what we just talked about as related to the currency markets, but you also have the Middle East situation, you have economic uncertainty, you have all these factors. As far as silver is concerned, though, it's really a coattail commodity. And unless we get a huge speculative bid back into commodities, it will not re-achieve those levels. My advice is basically not even to participate in silver. I think it's too volatile. It's too much of a speculative playground, if you will. And what we like is long gold through the use of options. A conservative, long-dated, bullish option strategy would be the way to go. If you really want to be speculative in the precious metals, I would go with platinum. Has a great industrial base, and certainly India is one of the reasons for that, with strong auto demand. Strong demand out of Asia, of course, will continue as well. So if you want to be really speculative in nature as opposed to a little safer trade, go with platinum.
All right, let me come to crude a bit. We've got a Goldman Sachs report out today saying that even as oil prices are pulling back from their recent highs, we expect them to return to or surpass the recent highs by next year. Is that a forecast that you would agree with? We've seen substantial cuts in crude oil prices and a bit of a recovery today.
I wouldn't disagree with that forecast. I think it's going to be a very erratic, choppy, volatile pattern getting there. But these commodities, these industrial commodities, and I would put copper, by the way, in this category also. The demand for oil is going to do nothing but continue growing. I think we will get into situations where we have very tight supplies. The correction we've had now is based on the fact that near-term supplies are starting to become a little bit more ample, and the market had kind of over-discounted some of the outside situations, such as the Middle East crisis. But I do agree, I think crude oil will move back toward $120 in coming days. You see, that's the difference between silver and gold and copper. The fact is that silver doesn't really have that fundamental background of support, and gold does, copper does from a demand standpoint, and of course many of the agricultural commodities as well.
But I'm curious to know what happens when, and I know this is an anticipated move, but what happens when QE2 comes to an end in June? Is that going to have a big impact on commodities?
I don't think so, because it's pretty much expected that it will come to an end. I think that's built into the current price structure. Also, there are growing ideas that maybe the Fed will continue to keep the spigots open, if you will, through some different measure. It doesn't have to. QE3 is so politically charged, is very unlikely to happen. But I think the Fed will keep things loose through other measures. So I think that's pretty much built into the cake, if you will. Should that change and the Fed really get tight, then you might have a different story. But I don't anticipate that through the rest of the year.
And do you also think that the news we just heard on Greece, and Bertha was telling us how there is an emergency meeting of EU officials with Greece, in fact, considering maybe wanting to pull out of the euro. There have been concerns overhanging with regards to its debt restructuring. If that, in fact, worsens into a certainty, do you believe that will play into commodities in a big way?
It'll play into gold, because that could create a lot of chaos within the EU. So I think it would be a factor in gold. My gut feeling is that they will not withdraw. This is a story. Maybe it's a little brinksmanship. I'm not sure. It just happened shortly before I arrived here. But my gut feeling is that they won't withdraw. Should they withdraw, and then you see perhaps someone else have the same idea, Portugal or Ireland, then you have some real chaos. Again, this is the type of thing that feeds into the gold market, and one of the reasons why the gold market is as strong as it is. And I think there are so many things in the background that are likely to pop up from time to time. Gold will be well supported. Also, on this correction,